Hi everyone, welcome to Brooklyn Bridge Park. That's a fire. I think there's a firebird rushing past me there. There's a nice big barge coming as well, so you have the benefit of that later in this video. Um, so time has passed. There's a lot to catch up on. Actually, I think the big story in oil is really what's going to happen with Trump versus Putin right here, because obviously the attitude has changed. It's been very interesting that it was seemingly, according to Donald Trump, driven by Melania, who's Slovenian. The Slovenians have not been big fans of Russia's invasion of Ukraine, to say the least. And as a result, Donald is getting very impatient with Vladimir, and that is interesting for oil markets because we now have somewhere around a 20-day deadline has been set yesterday this week for Putin to get his act together. It's not clear what Trump is exactly asking for, but essentially he wants a ceasefire. And we'll see what happens with that. But of course, the threat is that if you don't comply, Vladimir, we're going to put a 100% tariff on any oil importers who move Russian crude, which is just directly basically India and China. So that's interesting. India is a huge refiner nowadays, and so is China for that matter. So it's a big deal. And the US Treasury really has the power to enforce this. So what they do is basically say anybody who imports Chinese oil has US financial sanctions. And that is still a very big deal, a big threat, and one that we've talked about on previous videos. If you remember, at one point, the chief executive of Hong Kong, Carrie Lam, was sanctioned by the US Treasury, and she had to be literally paid in cash by the Chinese government. There was no other way to get the money to her. So that gives you an idea of how much power this could have. And of course, with the amount of oil that Russia exports, which is 7 million barrels a day, one of the biggest exporters in the world, this could be a very big deal, which actually the market's not really pricing. The market's pricing the opposite. The futures curve is in quite steep backwardation. And the market is clearly pricing the end of summer in the Middle East that we've talked about, the end of driving season. So it's interesting that there seems to be a sort of taco view of this Russia threat from Trump, insofar as the market's just not pricing it, which might be an opportunity, especially as we're going into hurricane season right here. And we'll see what that does potentially to the refining system, which has been running very, very well. So we had good results from Valero, very good results by their standards from PSX. Two huge US refiners reported for 2Q last week. Very good results against expectations. Basically they beat, but generally speaking, they've been running extremely well. So those refiners are doing a terrific job. And we always say the first principle with refining is run the refineries, and that's exactly what those guys are doing. The PSX are particularly interesting because it's subject to turnaround with Elliott Management as an activist. So the improved performance there is significant for the stock, and the stocks look pretty good. Here's this great big barge of gravel. Love it. So that's that, and we'll see what happens. But as noted, the market's expecting oil prices to trade off here as we exit summer. And people have been observing that Aramco's stock price, which is reaching post-IPO lows, all-time lows. It was only IPO'd around 2020, 2019, 2020, in fact. So it's IPO'd back then, but it's hitting new lows. And one of the issues there is Saudi investors are selling, which has people thinking, I wonder if the oil price is about to go down. But actually, there's a general trend towards Saudi investors selling. The strength of the market there is actually requiring more investment dollars. And, the multiple of the Saudi market has always been quite high. So what you're seeing there is perhaps more of a market factor than a specific Aramco factor, but the reality is that Aramco is hitting new post-IPO lows, which is to me an ominous sign when the Saudis are talking about going for market share after Labor Day, which is what they are saying, and that's why everyone is bearish oil here. People have been bullish gas, and that's actually traded off quite a lot. But the LNG story here in the US just keeps getting bigger and bigger, and we're over 15 BCF a day now, over 2.5 million barrels a day of oil equivalent of LNG into gas into LNG export plants here, which is a mega story. And combine that with the news of the week, which was that the EU plans to buy $750 billion worth of US energy over the next 3 years, which actually isn't physically possible, but let's put out a big target anyway. They're only doing about 76 billion right now, and they've got huge structural suppliers like Norway to think about. But anyway, there's a huge target for more LNG imports into the US, which is overall bullish the LNG theme, and some of the names we've liked, like Cheniere, continue to do very well. Another name we were talking about was Enterprise Product Partners, a very good company. They had okay results, and we're talking about the oil market. They're less bearish than others on the oil market, basically because of low inventories. So their view is that if we go back into contango, the market will buy the oil to store it, and that will stop us from going too low here, which is a definite problem for my $40 call. And by the way, oil prices haven't been below 50 on the future strip since 2019, believe it or not. So, sorry, I should say 2020, of course, during COVID. But basically, we've maintained above 50 ever since. And so, calling for 40, especially in an inflationary environment, really means that you're super bearish in terms of balance. And we pretty much are. There's been some big startups again this quarter, so we've got more incremental supply coming on stream. And that theme just continues quarter after quarter. The big one that will be reported very shortly this week actually is going to be another unit for Exxon, who report at the end of this week, but they've got another FPSO starting up, a big one, a big boat starting in Guyana, which increments, I think 250,000 barrels a day of supply from Guyana alone. So that's the sort of stuff that we're talking about. It's very big, keeps us bearish. Broadly speaking, the oils have kind of been doing okay, but as you know, this market is highly concentrated. You either buy Nvidia or nothing kind of thing. So whilst we've been doing okay from an alpha point of view, the oils have been kind of flat. From a beta point of view, we haven't really outperformed the market. And in fact, we've dipped to just about 3% of the S&P 500, which is depressing. And I was also kind of depressed that Hess, really our story stock, by far the best mid-cap we had, the most exciting story in oil, incremental catalysts constantly coming, like I just mentioned in Guyana. Sure enough, has just become part of Chevron now. So, and guess what replaced it in the S&P 500? Block XYZ stock. It's like, oh God. So we lost some more market share there, and that's a tough one. Broadly speaking, the oil industry is doing well, and that's the point that Enterprise made. One of the final controversies to talk about is where's US production going, because we had a profit warning today from ProPetro, which is a big pressure pumping play in the Permian, and they're really struggling. They've literally had a profit warning. So you can see that the activity in the Permian is slowing, particularly amongst the more marginal players. So the big guys, the Exxons, the Chevrons, the Conocos keep going, but the marginal activity is definitely slowing big time. We're talking about fracking here. These are the frack crews that ProPetro runs, and they're down heavily with ProPetro actually reducing capacity. They're not just going to sell into the market for nothing. So that tells you that US production is going to start correcting, and the battle hit from here, as we've always said, is going to be between global demand, which is going to be seasonally weakening going forward from here. We're in just about August. From September onwards, we get weaker on the demand side. The supply side keeps getting stronger, and the question is, where does the US go from here? Enterprise was saying they think US production holds up, actually. But generally speaking, the view is that we're going to be tightening US activity, and that's the balancing item, so we have to watch that dynamic. As I said, so far frac spreads are down, rigs down heavily, and production is sort of holding up flattish. So that's where we're at. We're right at the turning point on that one. Okay, I'll leave it there. Have a great day. There's New York Harbor. Final view will be last statue, the Statue of Liberty. Let's not go with any strange languages for that one. You can just about see it way back there. Cheers.